Let's dive right in.
$51.83 million. That is the total amount of leveraged Bitcoin positions that are about to get absolutely wiped out right now at 8 a.m. UTC.
And this heat map, well, this is our battleground for today. You see those bright lines? Each one is a massive cluster of leveraged bets just waiting. The price is about to get yanked toward one of these zones, and we can see exactly where the biggest pools of money are sitting.
Now, to be clear, this isn't some theoretical number. This is live, active capital on the line, and it's acting like a powerful magnet for the price.
But here's the part that should really get your attention. How in the world did this risk suddenly jump by over 35% in just a handful of hours? We're going to break down exactly how this pressure cooker got turned up so high. If you find this kind of analysis valuable, go ahead and drop a like and share.
Okay, first things first, let's look up. There's a fundamental rule in these markets. Price hunts liquidity. And right now, the biggest prize is dangling just above where we are.
Look closely at these bright yellow bands right here. That is a huge pool of short liquidations. We're talking about traders betting against Bitcoin, and they're all clustered around that $90,000 mark. This makes it a prime target for a short squeeze.
You're going to hear me say this again, because it is the core thesis here. Price hunts liquidity. The market's algorithms are literally designed to seek out these big pockets of orders to kick off a cascade.
And that's the mechanism, right? A push-up forces all those short sellers to buy back their positions to cover their losses. That forced buying then acts like jet fuel, pushing the price even higher to hunt for the next zone of liquidity. Make sure you subscribe to the YouTube channel for more deep dives just like this one.
But, this magnet, it works both ways. It's not all about going up. So now, let's flip the script and look at the other side of the trade, the liquidity pool sitting below the current price. This is where the leveraged long positions are really starting to sweat.
See these horizontal bands below the price line? That's the opposite bet. These are huge clusters of long liquidations. This is the spot where the bulls get wiped out.
And this really brings us to the critical question, doesn't it? Is all this liquidity down here a safety net that's going to provide support and bounce the price, or is it simply the market's next big target?
And this is that opposite scenario we talked about, the long squeeze. A sharp drop in price triggers stop losses and liquidations for all the long positions. Therefore, selling just accelerates the drop, and the cascade starts. But this time, it's heading down. You should follow us on Twitter for real-time updates on which of these zones gets hit first.
All right, let's circle back to that question I left you with at the beginning, that escalating risk. I'm going to show you exactly how this pressure has been building minute by minute over just the last 8 hours. So let's put these two charts side by side. On the left, you've got midnight UTC. The total leverage at risk was just over $38 million. Now, look to the right. Just 8 hours later, it has absolutely ballooned to nearly $52 million. The visual tells the whole story.
Let's put a hard number on that. That is a 35.8% increase in total liquidation leverage. And again, that's in just 8 hours. That's incredibly fast.
So the takeaway here is actually pretty simple. More leverage equals more fuel for the fire. And with this much fuel being loaded into the system so quickly, a violent, explosive move isn't just possible anymore. It's becoming probable. If this analysis is helping you make sense of things, dropping a like is always appreciated.
So what does this all mean for you? What's the real takeaway from all this data? Let's put it all together and synthesize this into a clear strategic outlook.
Okay, let's boil it down. Number 1, leverage is accelerating, and it's accelerating fast. 2, the key battleground to the upside is that $90,000 short liquidation zone. 3, there's major risk to the downside if those long liquidation zones get targeted. And 4, both the bulls and the bears are way too leveraged, creating a tinderbox. The bottom line? You have to expect extreme volatility. To stay ahead of moves like this, make sure you're subscribed to the YouTube channel.
Honestly, this quote just sums it all up perfectly. In a market this leveraged, the only thing you can be certain of is a violent move. The only question left is, which way?
So the final question, really, is for you. Are you positioned for the volatility that is almost certainly coming? Subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.